What's up everyone, it's Scotty with MoneyVest. So this is going to be your technical update, weekly technical update on the Magnificent 7 and core big tech stocks here so that you can plan your trades for the coming week. Since today is Martin Luther King Day, in observance of that, the markets are going to be closed. And we also have a really big sale if you're interested in enrolling any of the courses, because we do have all the individual courses up to 60% off. So fundamental, technical analysis, options, and psychology, you can literally get them at 60% off, and the bundle, which is the full 4-course bundle, 70% off, and individual bundles, 2 courses and 3 courses, 50 to 60% off as well. So again, links going to be down below, and the coupon code is going to be MLK. That's literally 3 words, MLK. You can apply that coupon code and get up to 60%, 60 to 70% off on these courses, which is going to be limited for 1 day only. So today only, tomorrow it is going to be expired. Again, links going to be down below. Would love to have you on board. So this video, I wanted to go over the entire analysis on your big tech and the market, and in terms of technicals and where we are with respect to all the overall market technicals and individual stocks as well. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like and of course subscribe to the channel, and links to our Discord and Patreon also down below with that 16% annual discount that's available for a few more days. I've opened up a couple more spots if you're interested in joining. So this right here is going to be volatility. First things first, volatility, you'll notice every time it gets up to these levels, it is a time to be buying. So this right here is when I personally like to look at dollar cost averaging and of course focus on consistently buying at these levels. This right here, once again, volatility spike. Right now we are at pretty low levels. We are muted. So this right here, of course, volatility was pretty elevated back in 2022. So 2018 was kind of like the floor. So this right here was considered as a floor for the volatility. And now since we are in this very sort of muted, subdued levels, 18 to 20 is now considered as a ceiling, which is going to be representing of these buying opportunities. So this right here, boom. So this basically, this buying is going to, in my opinion, take place when volatility does end up eventually spiking up to 2022 levels, but we're not there yet. So right now we need to be very cautious considering how low we currently are. So from a risk reward standpoint, yes, the markets can continue to drift higher, which is great. The markets, there is potential for us to hit new all-time highs, but we still need to be incredibly careful considering how low the VIX is. Anytime, any day, any certain week, it could actually see a big spike back up to 18-20 levels, and that's when we will start to DCA, simply dollar cost average, into the market, and I'll be a little bit more aggressive. Again, all those alerts will be shared with all the members down in the Discord. This right here is again the weekly time frame on the volatility, and what you'll notice is the VIX was for the longest time very low up until, of course, 2020, when it spiked all the way up to 84, 85. So this right here was a level that the VIX got up to during COVID. And then, of course, it took a very long time before finally settling down to sub 13, sub 12 levels. And again, this right here were very incredibly high volatility readings up to as much as 36, 34. This right here was a period when the VIX was low. Again, it was time to be super cautious because this is the entire 2022 bear market. This is the entire sell-off in 2022. And once again, we are down to pretty low levels. Not saying that the volatility is once again going to spike and we need to be cautious and start selling stocks. No, it is just something that we kind of assess from a risk-reward standpoint. Just because the volatility is low doesn't mean we need to start selling. It's the other way, is not the same way as when the VIX is low. In other words, when the VIX is high, it is most certainly the time to buy, in my personal opinion. Most of the times, it's kind of been a very good sort of indicator to dollar cost average into. But when the VIX is low, it doesn't necessarily mean that we need to start selling. So hope that makes sense, because just because when the VIX is high, it is, in my opinion, time to buy. Just because the VIX is low, it does not mean that it's time to actually sell, okay? So this is true. This is not indeed true, okay? Because volatility can be low for long periods of times, and the markets can continue to drift higher. So what instead I like to do here is hedge, okay? So there's the difference that I wanted to represent, that just because the VIX is low does not mean sell. It simply means hedge, be prepared for a potential spike in the volatility, and be ready with cash, right? So be cash ready, basically be cash rich for when the markets do represent themselves once again in the market. But when the VIX is too high, that's an indicator to be buying. Hopefully that kind of makes sense. Now going over to this right here, which is market breadth, another indicator that we like to track and follow. And this right here is percentage of stocks that are trading above their 50-day moving average. And once again, we're sitting at a little bit over 82. So that means 82% of stocks trading above their 50-day moving average is something that we have seen previously time and time again. Again, every time it kind of gets up to that red rectangle, we have seen a little bit of a pullback, and of course, the market starts rolling over. Now, that doesn't necessarily mean that, again, it's time to sell. Simply means that we need to be ready with hedges, with cash, with dollar cost averaging opportunities, and of course be prepared for when the markets do end up, let's say, rolling over, for us to buy stocks. Because every time, it's not if, it's when. Again, remember, with these types of indicators, you can quite literally see it's not if, it's when. Pullback, sell off, pretty aggressive sell off over here. This right here, pullback. This right here, pullback, right? You go across the chart, pullback. This right here, aggressive sell-off, right? Aggressive sell-off. So do we really think that this is going to forever stay up here, right? And even get up to, let's say, 100% and stay up there? No, of course not. We are going to see a pullback. We're going to see a pullback and a drop in stocks eventually. We are going to. It's a fact. We just don't know when, right? That's exactly why it is important to be ready, to be prepared for when this indicator gets up to these levels at 82%. Now, again, this is simply buy right here. This is simply buy signal right over here, but this is not a sell signal right away, because as we have discussed, markets are again trending upwards. They, on a longer time frames, they continue to trend upwards, and we have seen, of course, the markets continue to move up, so markets can keep drifting higher. And these indicators can stay higher for longer without actually pulling back. So that is exactly why it is so important to not confuse the two. We're only analyzing the risk and reward here, and this may be true, but this is not, unless of course you want to be super tactical and you're actively trading stocks. Don't consider these as pure sell signals right away, because they can stay up there for a pretty long time until finally pulling back, as what we are witnessing right now. Markets are still drifting higher slowly and steadily. The buyers are still stepping in, even though these indicators are somewhat in that red sort of zone. Volatility is still low. We're still not seeing a pretty sizable pullback. This right here is another indicator. That's going to be the 20-day moving average, I believe. So that's S&P 500 stocks trading above their 20-day moving average. We did see a little bit of a pullback, so we're already starting to see a little bit of that downtrend here in the market. But of course, buyers stepping back in to push us back into that range of 92 to about 100%. Stocks trading above their 20-day moving average. Once again, it's a fact that we do see pullbacks when these indicators do get up to that red zones. And right now we were in that red zone. We saw a little bit of a pullback. So next week and the following weeks, we'll see if this continues or if you get bought back up. I have no doubt. I think the market's got the potential to once again trade back up to all-time highs. And once we get up to all-time highs, that's when the real fun begins. Can the market stay there, or if it's going to be some type of profit taking place, which is going to potentially bring the markets back lower. So this right here is NASDAQ stocks trading above their 200-day simple moving average. Once again, you'll notice that we are inside these red rectangles over here. And of course, if you start seeing some downtrend, this right here is going to be that support level to watch. Again, previous support, previous resistance, all those levels kind of in line with 20s, low 20s, and of course in the low double digits to high singles, clear buying opportunities, buy signals for the markets. But this doesn't necessarily mean that it's an immediate sell signal for the markets as well. So again, just got to keep that in mind between the two. Now, this right here is the S&P 500. Now, going over to the markets, of course, it's been on a very nice, consistent uptrend. As you can see, the previous resistance acting as a resistance over here as well. So 4,800 is pretty much the all-time high, and that is going to be that level to watch. And of course, support level is going to stay put at 46.33. So that is going to be the more near-term support. Again, previous resistance, and that is indeed going to be that next support level, all the way down to those moving averages, the 200 SMA on the daily, and of course this higher low. So we've got a lot of levels to watch. 4,800 of course being the all-time high, the resistance and the target, support level being at around 46.33. That's going to be the more near-term support level to keep in mind. And S&P, of course, the RSI a little bit more elevated at 65. MACD also showing some signs of maybe some potential back higher to all-time highs. But like I said, that is going to be that resistance at 4,800 to watch on the S&P. Now going over to Apple here, and I believe I had NASDAQ as well. Let me see if I have the NASDAQ over here. If not, then I'll just go over that in our actual trading view charts. I believe I had it, but I don't. Okay, so going over to NASDAQ over here, you'll notice a very similar pattern where, again, it's kind of bouncing back higher from that support of 14,400. So this right here is going to be a very, very important level of support, and next target and resistance going to be at 15,000. That's going to be the key level to watch. 15,500 to 15,400 inside this red rectangle. And of course, we're seeing some momentum back up from that support. It's still a little bit of ways away from its all-time highs, so we still have 7.5, close to 8% upside needed in order for this to trade back up to all-time highs. And of course, the RSI and the MACD also showing some signs of that recovery back up for the NASDAQ. Now going over to Apple, took a trade at around 180s. 183 was my entry a little bit later, but It's kind of bouncing off of that 200 simple moving average. Of course, this right here was a very nice uptrend, very, very tight range. Then it started kind of making this falling wedge, then a huge breakout, and then, of course, coming back down. Very, very oversold, trading right at that 200 SMA and that support of $180. And my initial target is going to be up to 190 to as much as $198. So those right there are going to be a couple levels to watch for Apple. And, of course, a much stronger support at 165. This right here, for me personally, is going to be a great buying opportunity for Apple at around 165 because I believe that is going to be a very strong support. And even from a fundamental standpoint, I think the valuation is going to be a lot better considering where it's trading at the moment. RSI MACD, again, showing some signs of that potential recovery. And next resistance, like I said, 190 all the way up to $198 target on Apple. Amazon, on the other hand, you'll notice was in a little bit of a downtrend all of 2022. Finally started recovering in 2023. So this right here was the entire downtrend. This right here is the entire uptrend. Then, of course, a little bit of a downtrend. Then, of course, a bit of an uptrend. So it's just been kind of back and forth. And right now, 143, very, very important level of support, and a resistance up to 155 to 161. So inside these two red lines is where the resistance and the supply sits for Amazon at the moment. RSI MACD is still showing signs of some potential upside, but like I said, resistance going to stay put at 155 to 161, kind of like in between those red lines here. That's going to be the area of supply, and support level is going to stay put down to 143, kind of in line with where we have been validated in the past. Also a previous resistance for Amazon. Very nice consistent uptrend. Continue to monitor this one. Tesla, on the other hand, again, unfortunately, it's been on a bit of a downtrend, something that we have already discussed in our previous video. So this right here is a sort of like a widening wedge for Tesla. Then we started making a little bit of an uptrend. Again, got rejected at this huge wall of supply that's going to be sitting between 275 to 300. So $275 to as much as 300 is where a lot of the supply, a lot of the resistance sits for Tesla right now. And these are going to be very, very important key levels because Tesla has been getting rejected at 300 time and time again. It's just not able to break out of that range. And support level is going to stay put right here at 190s to low 200s. So basically, low 200s is where the support sits for Tesla right now. This is basically the range that everyone needs to keep track of for Tesla. And this is the overall downtrend, right? So lower highs, lower lows, RSI MACD also coming down to almost oversold conditions here. And again, low 200s is where Tesla will be in my opinion, moving forward, considering how aggressive this sell-off has been. 2 consecutive back-to-back weeks of red. This right here, despite the little bit of an uptrend, it's just been selling off pretty aggressively on the back of some other catalysts and of course, underlying issues that I've covered in a different video. But this right here is going to be that support level inside this green rectangle. Nvidia, on the other hand, somebody just stop this freaking beast. It is just taking no prisoners. Short sellers are having a nightmare. This right here, just consistent uptrend, consolidation for weeks, in fact months, and then finally breaking out of its ascending triangle over here. So it was obviously pushing up, moving sideways, and a huge breakout to the upside. We kind of called it, again, don't want to brag and flex, but we did kind of call it in our market updates, talking about how there was a little bit of an ascending triangle that Nvidia is forming. Very nice, rally up, and then a little bit of that higher low. There's a potential for a breakout, and look what exactly happened. Nvidia breaking out to 547, 550s. So very, very nice move to the upside. Incredible jump, and of course, not to mention the RSI and the MACD is overbought. So just obviously got to be careful from a risk reward standpoint. If you're holding this from a long-term investment, that's great. Congratulations on the big gains. But of course, technically speaking, starting now at these prices, considering the risk reward is so not that great, would not be the ideal place. Of course, the much better support is going to be at 400. So 400 was the perfect price from a swing trading perspective for Nvidia because it's rallied from those levels time and time again, once over here, twice over here, 3 times over here, validating that support, and of course 4 times over here. So every time it comes down to this $400 level is ideal from a risk reward standpoint for Nvidia. Talking about advanced micro devices, so AMD, you'll notice, was also on a very, very nice move up. So this right here is the downtrending channel of lower highs and lower lows. And since then, of course, a very, very nice move to the upside. A little bit of that higher low. So you'll notice that this is where we started. Boom, another higher low, another higher low. Resistance, higher high, and higher high. So it's been on a very nice sort of a uptrend and just been staircase pattern where it continues to move up. So that is resistance going to stay put at 156 and support level is going to stay put down to 130. Talking about Meta platforms, and Meta here also with a very, very strong recovery, not taking any prisoners, absolutely crushing it when it comes to those market returns. This right here, a very tight channel within which it was trading, kind of consolidated sideways, and now it's actually trading in a proper uptrend, kind of drifting slowly and steadily back up to all-time highs. And 383, this is going to be that target and pretty much that resistance, almost back up to its all-time high, which makes me super happy because everybody ruled out Meta in October of 22, believing that the company was dead, and people who held on, had high conviction, believed in the company, have profited really well. So huge congratulations to anyone who believed in the company's vision and the fact that it could recover and it's a high quality stock. Patience and conviction pays over the long term. And 383, of course, is going to be that next target. Support levels down to 352 to as low as $330 to $315, kind of inside this green rectangle. Now going over to Google, and Google also on a very nice pattern upwards, a little bit of that rising wedge pattern as well for Google. So this right here is going to be that higher low. Resistance and targets all the way up to 150, and support levels are going to stay put down to 139, 144 for Google here, all the way down to 126 to as low as $117. So of course this right here is the downtrending channel, lower highs and lower lows, and of course this is going to be that uptrend of higher highs and higher lows, a little bit of that consolidation, and then of course now starting to move back up. So that is going to be that rising wedge, or in other words the uptrend. Support level is going to stay put down to 139 to 144, resistance all the way up to 151 for Google. And finally we come to Microsoft, and Microsoft also on a very nice consistent uptrend, pretty much trading inside this range. It was consolidating sideways for a little bit, so this right here, so much consolidation with the support level sitting roughly at 366 and finally breaking out to new all-time highs, briefly overtaking Apple as the largest publicly traded company in the world, with market cap approaching close to $3 trillion for both companies, and that is going to be that level to watch at 366, very strong support, another support at 384, and of course new target's going to be unknown considering that it's an all-time high. So that's where we are. A lot of stocks breaking out to new highs, coming up to its all-time highs, or trading up to its all-time highs, or trading up to its 52-week highs. Everything's in an uptrend except for one stock, which is going to be this one right here, Tesla, still consistently trading down in a little bit of a downtrend, 2 back-to-back weeks of red, but everything else seems to be moving in the right direction for the markets. So there you have it, the entire update on the market technicals. Definitely do check out the courses down below, 60% off on individual courses. We've never had a sale this big. Coupon code is going to be MLK. And also do check out the courses bundle, 70% off. Again, coupon code is going to be MLK. Link's going to be down below. Hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. And as always, happy investing. I'll see you all in the next video.